China is collapsing before our eyes because they are trying to print and borrow their way out of a debt crisis. Take a look at this chart. What you're looking at is the 10-year yield on the Chinese government bond. This is a long-term chart going back all the way to 2002. And you can see that about a year ago, the yield on their 10-year bond started to fall off a cliff and is now at an unprecedented 1.6%. And it's not just the 10-year. If you look at the 2-year yield, it has also fallen off a cliff and is at an all-time low since 2004 of just over 1%. Their 1-year yield is also testing new lows at around 1%. And if we zoom in to just the last couple of months, you can see there was a brief bounce off of 0.8%, but after a slight rebound, does look like it is headed lower from here. Now keep in mind, this is the yield on government bonds in China, which means somebody is buying these bonds because the price of bonds and the yield on those bonds are inversely correlated. So if a bunch of money enters the system and buys up a bunch of government bonds, it's going to drive the price of those bonds up, which drives interest rates lower. In a free market, this would be a good sign for the borrower because it would mean there was lots of demand for their debt. But China, being a top-down, centrally planned and controlled economy, in other words, communism, is not a free market, especially when it comes to their government bonds. If you want to know who is buying up such a large quantity of these bonds in order to drive yields to record lows, it is none other than the PBoC itself, the People's Bank of China. In other words, their version of the Fed, the central bank. They are printing dollars in order to buy up their own government bonds in order to drive those yields lower. You can see how dramatic of a rise in money printing has taken place over just the last 6 months or so. Just to put this in perspective so you can see how significant this move has been, let's compare China to Japan. You can see that towards the end of 2024, interest rates in China have finally crossed below Japanese rates. This is insane considering Japan has historically been the ones who would keep their rates lower despite conventional economic wisdom. And now these places have completely reversed with China dropping below and Japan rising up above. Now, the reason they are doing this is because Xi recently came out and said that they are going to be pursuing growth basically at all costs. It is a top priority for them, but I'm going to show you why it doesn't matter if it's a top priority for them. The way they're going about it is ultimately doomed to fail. By the way, guys, if you're looking for a way to profit from this situation, I have a bit of an urgent plug for you here because this Thursday, that's the 23rd at 7 p.m. Eastern time, I'm hosting a completely free asymmetric trading masterclass. And this is your last chance to register for the event. The last time I hosted one of these masterclasses, we had more people sign up for the event that could actually fit on the Zoom call. And this time we may end up with many more, which means you don't have long to secure a spot for yourself. With a new president about to take office, volatility building pressure all around different areas of the market, financial regulations and money flows changing, I don't have to tell you that 2025 could get wild. And you'll want to know how to profit from the coming sea change. That's why I'm going to show you the best way I know to profit from the market chaos, both to the upside and to the downside. I'm even going to do a live Q&A at the end of the call to discuss any questions. Remember, this masterclass is completely free. All you have to do is sign up with the link in the description below to attend, but only a few days are left and spots are filling up fast. So click the link, put in your email, save it on your calendar, make sure you show up a few minutes early, and I'll see you there. First of all, it is because they are facing a debt crisis. China has now overtaken the US in terms of debt as a percentage of GDP. And this new trend does not look like it will be slowing down anytime soon. So if you are somebody who recognizes that the debt to GDP is a problem in the United States, then you should recognize that with China's debt to GDP being worse and moving in a worse direction should be an even bigger problem. Like I said earlier, you cannot print and borrow your way out of a sovereign debt crisis. China is facing the consequences of decades of top-down forced growth that has resulted in malinvestment and misallocation of resources. They have faced debt bubbles, asset bubbles, real estate crises, but the one that stands above them all is the one force in economics that trumps everything. And that one force is demographics. You cannot fight demographics, and win. It is the most powerful driving force in all of the economy. If you take a look at China's birth rate, you can see that over the last 70 years or so, it has consistently dropped lower and lower and lower. And when you take a look at this chart, which plots the number of total births in China from 2013 through 2023, you can see that this has steadily declined as well. In fact, they only had 9 million births in 2023, which was only 3/5 of the official forecast of 15 million. Now, this part is absolutely insane, and I had to go back and double check to make sure that this number was accurate, but China in 2023 had fewer total births than they've had since 1762. That's right, 9 million births is the fewest that they've had since 1762, when the total population was only 200 million. Their population crisis is so severe that China officially acknowledged that its population shrank in 2022 for the first time in 60 years. And this happened 9 years earlier than the government had projected it would start. Now, it is true that places like the United States also have a birth rate that is below the replacement level, but the United States has had a birth rate below replacement level since the 70s. However, our population has still grown every single year because of immigration. There's no immigration in China. Their population is shrinking. And this is such a big problem that when you look at this chart from Visual Capitalist that plots their GDP growth per person or per capita, you can see China is lagging all of Asia. India and the Philippines are leading the pack with 8.7% GDP growth per capita. And even Japan is beating China now with 4.1% growth for Japan and only 3.9% in China. If you looked around and you saw the Federal Reserve printing trillions of dollars, buying US government debt, and then the government using all of that cash in order to buy up different investments, buy up properties, turn old abandoned buildings into public housing, trying to stimulate various areas of the economy, you would rightly assume that that was going to result in more problems and not fix the economic problems over the long term. All the printing, all the debt, is only going to spell disaster. That is true, and that's exactly what is happening in China right now. They're facing a self-imposed debt crisis, and they're trying to print and borrow their way out of it, and it's not going to work. There's a very good chance that volatility from this bleeds out into economies and markets around the world. And if you would like to learn my system for asymmetric trades in order to take advantage of extreme volatility in markets all throughout this coming year, which it looks like there's going to be a lot of, please don't forget to join my asymmetric trading masterclass. It's free. It's a live call this Thursday, January 23rd at 4 p.m. Eastern time. Sign up with the link in the description below. As always, thank you so much for watching. Have a great day.